What's going on, guys? Peter coming in from Benzinga and MarketFi here. Just want to give you your weekly update. Let's do a little recap of what happened last week. Pretty much, Apple was able to have continuation to the upside, peaking at 453. Really solid number, able to hold 450 throughout the day. We're going to look for a little bit of consolidation, possibly a pullback to the 440s, and continuing up higher. This thing was actually able to help drag the markets higher overall. Last week we were looking for the short opportunity. It did not come because a lot of the shorts got stuck in the 158 area, ultimately to be rammed right back into the 160s, into all-time highs of 161.88. Things to watch out for, guys. JP Morgan was the first in financials to show a little bit of weakness. That was due to a catalyst in the electricity markets. There was some probing going on with the illegal activity there. This thing broke 448, sustained down to 447, and we're going to see if this is real. It's going to continue lower through 47. If not, we'll see a relief bounce through 48, ultimately to help push the markets into continually more highs. The reason we say this is because that the current market conditions are pretty much driven by the techs recently. All right. Even with Amazon with horrible earnings, this thing is able to catch a bounce through 250 upwards into the 260s. Google on a roaring tear here all the way through 846. A lot of people are saying that this is going to be the first $1,000 stock, all right, out of the tech names, and we are going to be on watch for this. Hopefully this does not break down like Apple did early this year. And continually talking about that, we've got Apple, Google, Priceline. All these techs are really picking up the markets, and what really needs to happen is that the financials need to pick up the bids. If we don't have the financials picking up the bids, it's relatively a, how they say this, a bull market on fumes. And so again, guys, I would not start counting on getting any solid shorts in just yet. I would actually count more on some consolidation. For those levels, let's take a look. Pretty much anything above 160, I'll still consider it relatively bullish. We're gonna have to see overall. Again, guys, the big payouts last week were in Apple on the long side, Priceline on the long side, and overall just a bunch of writing strategies. All right, so writing has been paying off relatively well because this is sort of considered the melt-up. Melt-ups are usually not too good for those that are trading breakouts, playing long calls. So the writers of the puts have been paid out relatively well. We were able to snag, I think, 4 straight days of 5-figure trades through that. We're really happy about that. In general, it's a dip buyer's market. Usually, momentum players are not so good at buying dips just because the tape doesn't seem that clear. But again, guys, if you have the relatively bigger accounts, you should focus on writing strategies. I would possibly even look to writing some calls this week just because we're so overextended here. In addition to that, if we've got smaller accounts, I would pay attention to scalping on the put side. Those should have better risk reward throughout the week. So again, guys, stay on your toes. Watch out for the techs to fall off a little bit, to fade off when the momentum comes out, and see if the money goes back into the financials to continue the bull rise. Again, guys, this is Peter from Benzinga and MarketFi. Over and out.